Hello and welcome back to Global Value. In today's video, we are going to be performing a fundamental stock analysis of Darden Restaurants Inc. So Darden Restaurants might be an unfamiliar name to a lot of people. However, they own a portfolio of pretty well-known restaurant chains, which include pretty well-known restaurants such as Olive Garden and Longhorn Steakhouse. Kind of close. They're also trading close to their 52-week low. So at the time of recording today's video, they're trading for $125.17 per share. Year to date, their stock price is down 17%. Going back 3 years, we can see that their stock price was heavily impacted by the pandemic, and that since their lows in March of 2020, they've actually tripled since then. Over 5 years, they're up at a rate of 8.5% compounded annually. Over 10 years, that's a rate of 9% compounded annually. And going back prior to the global financial crisis, they've also compounded at a rate of about 9% annually. Keep in mind that this is also not including dividends. Currently, they're paying out about a 3.6% dividend yield, which is quite a bit above what the S&P 500 is currently paying out for dividends. Darden is trading for about $14 over their 52-week low. They're down about $40 from their 52-week high. They have 4% of their shares outstanding currently sold short, and they have a $15 billion market cap. So for some more background about the business, Darden Restaurants is the largest restaurant operator in the United States full-service space, with about 3 to 4% share of the full-service market. The company maintains a portfolio of 8 restaurant chains: Olive Garden, Longhorn Steakhouse, Cheddar's Scratch Kitchen, Yard House, The Capitol Grill, Seasons 52, Eddie V's, and Bahama Breeze. Darden generates revenue almost exclusively from company-owned restaurants, although a small network of franchised restaurants and consumer packaged goods sales through the traditional grocery channel contribute modestly. As of the end of May in 2022, the company operated nearly 1,900 restaurants in the United States. Darden Restaurants was founded in 1968 and is based in Orlando, Florida. So for our fundamental analysis today, we are going to be performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of Darden Restaurants based off of their business fundamentals. This analysis will continue to improve and get better over time. It's still a work in progress, and it's an opportunity to learn in public. So let's get right into our analysis. Starting off with metric number 1, we want their average 5-year return on capital to be above 14%. So the average publicly listed business earns a return on capital of about 7%. We're looking for businesses that are twice as good as average at least to build in a potential margin of safety based on the quality of the overall business. And in addition to that, over the long run, over the course of decades, a stock is likely to return approximately what its underlying business returns, and business returns are going to be captured here by return on capital. In the case of Darden, they were earning significantly above average returns on capital prior to the pandemic. That dramatically decreased their return on capital. However, they have been rebounding since then. In their most recent fiscal year, they earned about a 14% return on capital, and that's continued on so far through the rest of 2022 as well. Averaged out over this time frame, Darden Restaurants is still earning about a 14.75% return on capital, even when taking into account the pandemic. So that's above that metric we're looking for. This is going to be a check here on our first metric. If Darden Restaurants can either keep their returns on capital stable from this point on, or keep increasing them back to their former glory, that will be excellent for shareholders going forward. Next up for metric number 2, we want their revenues, earnings, and free cash flows to have grown over the last 5 years. This metric is all or nothing in nature, meaning that either all 3 of these are going to be up for a check. Otherwise, if even one of them is down, this is going to be an X. This was surprising for me to learn, but Darden has actually increased all 3 of these numbers over this time frame. Even during the pandemic, they were still producing positive free cash flows, which is a good sign of their business strength and resiliency overall, as full-service restaurants were more or less shut down for more than 3 months. While their growth in these numbers has been slight, they've rebounded quite nicely since the pandemic. And so this is our second check in a row here on metric number 2. Metrics number 3, we want to see earnings per share growth over the last 5 years. This is building off of our second metric, but helps us take the perspective of an individual shareholder in the business by looking at this on a per share basis. So similarly, here we're seeing earnings per share growth. I was expecting pretty significant shareholder dilution during the pandemic. However, that's not the case. Darden has diluted shareholders over this time frame, but only by a little amount, which is reflected here in the fact that they still have earnings per share growth. And so this is another check on metric number 3. Metric number 4, we're looking for free cash flow per share growth over the last 5 years. This one was also surprising, especially the fact that they were able to produce positive free cash flows during 2020. Over the long run, earnings and free cash flows should about even out and be the same for a business. It's all right that we're seeing some oscillation and discrepancies here. And overall, during this time frame, for each individual share in the business, they've grown the cash flows per share from $4.70 in fiscal 2018 up to $6.68 of free cash flow in fiscal 2022. So that's another check here on metric number 4. So far, we're starting off strong through 4 metrics. We've got 4 checks. Metric number 5, we want their net debt, which is long and short-term liabilities minus cash and short-term cash equivalents, to be below the amount of free cash flow that Darden has generated in the past 5 years. This is where we really get to see the continuing brunt of the pandemic's impact on Darden. They had a very small net debt position relative to their cash flows before this, but they were forced to take on quite a bit of debt in 2020. Luckily, they were able to do this at pretty reasonable rates, pretty cheap rates historically speaking. So at the end of their fiscal 2022, at the end of May, they had $5.5 billion of net debt. Over this time frame, they've only generated $3.5 billion of free cash flow. And while they do have more debt than their cash flows can support right now, the redeeming grace here is that without looking at them in depth, these debts are probably at decently favorable rates for them. The real concern would be going forward if we run into some sort of disaster type scenario or a potential downturn in the overall economy. If Darden's free cash flows go down and they're not really focused on paying down this debt, then this business could be in a precarious position. So this is our first X on metric number 5. Finally, the big metric of them all, metric number 6, we want their average 5-year free cash flows relative to their total enterprise value to give us a yield of above 5%. This will give us a risk premium to the risk-free rate of the 10-year treasury, and it'll give us a potential reason to be interested in the business. We're using total enterprise value because it is more reflective of the economic reality of the business compared to their market cap. So this is going to take into account both their market cap and their net debt position. So currently, Darden Restaurants has a total enterprise value of about $21 billion. And over the last 5 years, they produced about $3.5 billion of free cash flow, which is about $700 million of free cash flow in an average year. So when we divide that $700 million of average free cash flow by their nearly $21 billion total enterprise value, that is going to give us an average free cash flow yield of about 3.3%. That's just in line with the risk-free rate currently, and that's below that 5% metric we're looking for, which would have given us some risk premium there. And so this is going to be our second X on metric number 6. Then here we're taking a look at Darden's dividend profile. So people make mistakes all the time by blindly chasing dividend yield. Instead, it's important to look under the hood and understand if a business's dividends are supported by their abilities to produce free cash flows. In the case of Darden, they currently have a 3.6% dividend yield, which is quite a bit above what the S&P 500 is at right now. In 4 of these 5 years, all of them except for 2020, Darden was producing more than enough cash flows per share to be able to pay out these dividends. They made the somewhat prudent choice of slashing their dividend after they had to pile on all this extra debt load. And now they're paying out a dividend yield that is both supported by their abilities to produce cash flows and is above that of the market average. So while this is a snapshot of the past and is not going to be a roadmap for the future, it does look like since the pandemic, Darden does a decent job of making sure that their cash flows support their dividend payments. So in summary, Darden Restaurants checks the box on 4 out of 6 of our metrics. While the business is getting back to earning above average returns on capital, and over the past 5 years, even including the pandemic, they've grown revenues, earnings, and free cash flows and haven't had to dilute existing shareholders by nearly much at all. They have piled on a lot of debt. As an investor who would potentially be interested in the business, understanding how that debt is structured and how it's financed is very crucial to understanding this business going forward. Also, because of their high debt loads, their average free cash flow to enterprise value yield is only in line with about the risk-free rate right now. However, that could potentially be a bit deceiving depending on the interest rate that their current debt load is structured at and the maturities of their debt. This is something you definitely want to learn more about if you're interested in the business, as it might look like they have a lot of debt, but it could be structured in a way that's advantageous to the company. and would be an indication that the company may be healthier than its debt load would suggest. Then we also found out that in normal years and since the pandemic, Darden has done a pretty good job of making sure that their above average dividend payments are well supported by their cash flows. If part of your reason in Darden is because of their abilities to return cash to shareholders through their dividend payments, while not a guarantee, it looks like it's in decent shape going into the future. Finally, this type of analysis is not financial advice. It is not a buy or sell recommendation of any security. Instead, it serves as a beginning holistic starting point to determine whether it's worth your while to dig in and learn more about Darden. Darden has some pretty interesting aspects that would probably make it worth it to read through their 10K, to go through their debt and understand that. You would also want to understand what the business's real estate situation is like, whether they're owning or leasing most of their restaurant locations, and get a better sense of how management is approaching capital allocation as a whole. So the best way to do that is by reading through the company's 10Ks and reading the transcripts of their recent earnings calls. As a value investor, we're trying to come to an understanding of a business as if we owned 100% of it and truly know all of its ins and outs and understand the essence of the business. If you have questions during your research process, or you're thinking about making an investment in Darden Restaurants, please, before making any investment decision, consult with the properly registered financial and legal professionals. And so with that said, that's it for today's fundamental stock analysis of Darden Restaurants, Inc., ticker symbol DRI. Darden Restaurants was a subscriber request, and it's an interesting business to look at coming out of the pandemic. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next. Thanks for learning about Darden Restaurants with me, and have a great day.